Good afternoon. This is Ken at Tortoise Capital with a review of the weekend trading report for January 18th, 2020. Bullish normal conditions, overbought in every dimension. Risk Z is trending upwards, favoring the swing. Green bullish on this percent stretch. Risk Z is risk on. You can see the holdings that we have for January are featuring tech, financials, U.S. large caps. The theoretical exposure in ETF2 is 100%, so all systems go to the upside. Monthly move is strong. I would be 1 month low is my stop there. But we are in the summer. PSAR is up, 270 is up, the river and the dragon is up. Dragon is running right along the edge of the Z1, so everything's favorable. On a weekly basis, same thing. We're seeing 2 strong weeks in a row with very strong finishes. Dragon is riding the north shore of an expanding river. We are deeply into the summer, well beyond the Red River here. PSAR strong and long as far as the eye can see. I think I'd be about a 1 week low, 325. The last 5 days, you see we opened here and then it was nothing but uninterrupted gains all week. The 1 day low, a north skin of the dragon, midpoint of the dragon, and the 90, southern skin of the dragon, and PSAR. This one is the Bollinger Band mean. Long-term fair value, the 10-day low, so everything looks good on the upside. What I'm looking at here is the 5-day low, and then finding the Z3 score. And then this is the 10-day low here, and the Z3 score. We're already above that, so that tells you how strong these last 10 days are. So that's the current Z3 extension. And this was the Z3 extension a couple days ago. So just everything is just powerful and good. Big wins, Russell and Australia. Healthcare, utilities, Australia again. So the leaders generally led with tech in front. This is all US all the time. Healthcare did very well also. Energy getting smashed. In the Dow, healthcare, finance, Home Depot, travelers. This is probably a rebound from oversold conditions, but the winners generally winning. Sector spiders again. Mostly the long-term winners continue to reward. So this is a relative strength momentum game. The U.S. all above average, tech well above average, Asia generally lagging with the exception of China and Taiwan. Brazil and Mexico are doing very well. The alternate asset classes are giving it up and search for equities. Generally speaking, the winners continue to win, get some new strength into large cap growth. Shifts into the daily. No signals on channeling and overreactions. Just a handful of dojis. Walgreen offering a pretty interesting auto framer. Lots of breakouts in the ETFs, and only oil and energy offering a pullback opportunity here. So I think you have to respect the breakouts in technology. UDOW is like a no-brainer. Some super pinches that are well developed, ready to go. Walgreens exceptional auto framer position here. Oil and energy look like they're giving us some measured value plays in my view, so I'll be taking a look at those. Friday's relatively small range allows for some pretty interesting opportunities for mechanical breakouts. If we get an orderly open and then an excursion upwards to new highs, and that's a chance to pile on some key winners here. Even real estate, though, offering an opportunity. Quick look at the MACD 4 seasons on a daily basis. All the big winners. Look at all those breakouts across every time dimension. Things that are lagging: Boeing, ExxonMobil, Chevron, oil and exploration, metals and mining and energy. So that's where the value plays are. Treasuries had a big vote downward on that last 3 days. Collapse as money's rolling over into equities to chase the pump. Almost no volatility except recoveries to the upside. Still only at Z1 excursion, but this is a natural break point. The last time it got up to Z1, had this sell-off, had this sell-off, had this sell-off. So you should be playing the long side, however, having great respect for the possibility of volatility spikes. And there's just the lack of volatility lately. Pretty powerful moves to the upside. And on a long-term basis, looking at the last 10-year stats, we're almost at Z2 in terms of how powerful this 30-day move has been. So it's only the fact that the last 180 days have been so strong that it only looks like Z1. It looks like Z1 compared to the last 180 days is what I'm saying. But historically, this is almost a Z2. So that tells you just how amazing this has been. But there has been a little bit of ATR divided by price gains in here, bouncing off the low. So I'm ready for a volatility spike. All three finished strongly. The last time it was like this, we had this kind of sharp sell-off. Excuse me, an 8% sell-off. So let's be ready for that. How strong the Z-scores are in every dimension. And finishing up just for those of you keeping score at home. Healthcare and tech. Even emerging markets are playing along. And Microsoft has been the quiet, stealthy tech play. Thanks for your kind attention. Let's go get them.